Hi, I am Anna. I come from www.ntvforex.com. Bitcoin BTC price analysis considering chances of bulls to fix above $11,000 in short term. http ntvforex.com News ID 513E4B September 18, 14:21 GMT. Bulls are back in the game as most of the cryptocurrencies are again under bullish influence. Mainly, all top 10 coins are located in the green zone. The sharp rise of the altcoins has affected the dominance rate of Bitcoin BTC, which has declined and is now at 54.3%. The relevant Bitcoin data today: name Bitcoin, ticker BTC, market cap $202,975,758,055, price $10,975.67, volume 24H27,311,423,903, change 24H 1.01%. The data is relevant at press time. BTC USD can bears withstand and get Bitcoin back to $10,500 yesterday. In the morning, the price of Bitcoin BTC continued to decline. Sellers managed to pierce the daily EMA 55, setting a local minimum of around $10,740. In the afternoon, the pair began to slowly recover and, before the end of the day, it was able to return to the area of $10,900. In the morning, trading volumes decreased significantly, and further recovery to the target level of $11,200 was difficult. If buyers form a bullish momentum today, the pair will break through the level of $11,200, and the daily maximum is possible in the 50% Fibo area, $11,394. At the same time, the overheating of the market, which is seen on the daily time frame, may not allow the bulls to break through to the target level. In that case, sellers will try to return the pair to the support area of $10,500. On the hourly chart, Bitcoin BTC is likely to retest the $11,100 level after it has successfully bounced off the local support at $11,750. However, buyers have fewer chances to keep the growth as the volume is low, along with the liquidity. In this regard, the more likely price action is the false breakout of $11,100 on the weekend, followed by a decline below $11,000 next week. On the 1-2H time frame, bulls' power is coming to an end as $11,000 is a strong resistance that is unlikely to be broken for the first time. Although liquidity is high, the trading volume is going down slightly, which means that a short-term decline may occur. Applying the Bollinger Bands indicator to the chart, one needs to pay attention to the 61.8% level that refers to $10,681. That may be the endpoint of the correction before a new wave of growth. Bitcoin is trading at $10,984 at press time. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Bitcoin and Ethereum prepare for major price movement. http ntvforex.com News ID CB7A23 September 18, 14:02 GMT. Bitcoin kicked off Thursday, September 17, on the wrong foot. Following the 1.61% bullish impulse seen during the previous trading session, investors seem to have enjoyed the upward price action to realize some profits. As a result, the increase in selling pressure behind BTC was visible throughout the first half of the day. NBSP, the pioneer cryptocurrency, opened at a high of $10,957.06 and immediately began trending downwards. By 13:00 UTC, prices had dropped more than 2% to an intraday low of $10,745.55. Such a critical support level was able to hold, containing falling prices at bay. NBSP, the rejection from this hurdle allowed Bitcoin to rebound and recover nearly all the losses incurred throughout the first half of Thursday's trading session. BTC was able to make a high of $10,932.55, just a few dollars below the opening prices. While there are a few hours ahead of before the daily candlestick closes, there is a probability that prices will continue to fall. NBSP on the daily chart, the Tom DeMark TD sequential indicator is printing a sell signal in the form of a green 9 candlestick. The bearish formation estimates a 1 to 4 daily candlesticks correction before the uptrend resumes. If validated, Bitcoin could drop to close the CME gap that sits around $9,600. It is worth noting that turning the $11,100 resistance into support could jeopardize the bearish outlook. Under such circumstances, the bellwether cryptocurrency could rise towards $12,000 or higher. NBSP Ethereum resumes uptrend, aiming for $400. The news about the latest project joining the DeFi craze, Uniswap, combined with the Ethereum Foundation AS progress to launch ETH 2.0 seems to have made a huge impact on the smart contracts giant. Indeed, Ether opened Thursday AS, September 17, trading session, trading at a low of $364.97, and within only 1 hour it was already up by 5.69%. At 1:00 UTC, prices were hovering at a high of $385.37. NBSP. Despite the upward pressure that Ethereum experienced at the beginning of the day, such price action did not spill over the next 17 hours. The second largest cryptocurrency by market capitalization entered a consolidation period where it mostly traded between the $378 support and the $384 resistance level. It was not until 18:00 UTC that the bulls were able to regain control of ETH. NBSP. A spike in demand allowed Ether to surge another 3.34%, turning the $384 resistance into support. Ethereum made an intraday high of $394, outperforming Bitcoin and the rest of the crypto market. Although Thursday AS trading session has yet to close, it seems like the smart contracts giant has more room to go up. The most significant area of resistance ahead of this altcoin sits between $420 and $440. NBSP. Key price areas to watch. NBSP. When looking at the top two cryptocurrencies by market cap from a high time frame, both seem to be forming bearish patterns despite the rising prices. Bitcoin's green 9 candlesticks on its daily chart and Ethereum's bear flag pattern paint a different story to the price action seen on the lower time frames. For this reason, it is imperative to take a precautionary approach when trading these digital assets. NBSP. If Bitcoin closes below $10,600, it would increase the odds for a further downturn towards $9,600. Meanwhile, if Ethereum slices below the $366 support level, it would likely drop towards $250. So as long as these cryptocurrencies are able to continue trading above these crucial support levels, the bullish outlook will likely prevail. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Cryptocurrencies price prediction. Bitcoin, Tron, and Uni. A European wrap September 18. http ntvforex.com. News ID 3B4B51 September 18, 1355 GMT. Top 3 price prediction. Bitcoin, Ethereum, Ripple. Ethereum hits Bitcoin's bid to lead the market. The structural tension in the crypto market is increasing after yesterday's significant rise in Ethereum. NBSP. The fear of being left out FOMO of the launch of the Uni token by Uniswap triggered the perception of the value of the Ethereum network and consequently its interest in taking part in the project. NBSP. Read more. Tron price analysis. TRX bulls to hit a brick wall at 3 cents. Tron's TRX is one of the best performing digital assets out of top 20 on Friday, September 18. The coin has gained nearly 9% on a day-to-day basis and partially recovered from the losses incurred during the previous week. At the time of writing, TRX is changing hands at $0.029, having recovered from the recent low of $0.025. The coin retreated from the 9th to 15th place in the global cryptocurrency rating, with the current market capitalization of $2 billion. An average daily trading volume settled at $2.8 billion in the last 24 hours, mostly in line with the recent week's figures. NBSP read more. Uniswap Protocol's newly launched governance token, Uni takes on DeFi by storm. Uniswap is a protocol mainly for trading and automated liquidity facilitation on Ethereum. The platform is among the most popular decentralized finance DeFi projects in the cryptocurrency industry. Barely a month ago, Uniswap protocol was in the spotlight due to the drama that erupted with its fork SushiSwap, as previously reported. However, Uniswap managed to distance itself from the embattled Sushi token, which saw its value drop drastically from highs around $40 to $1. DeFi Pulse currently shows that Uniswap is leading among all the DeFi projects with $1.39 billion in locked funds. NBSP read more. NBSP. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Kyber Network Price Prediction KNC could be on the verge of a 50% correction. http ntvforex.com News ID 2C9B14 September 18, 1355 GMT. KNC is currently trading at $1.13 after a massive crash on September 3. The digital asset struggles to recover, but a recent buy signal could be the spark that bulls need. Kyber Network was trading as high as $2.04 on August 14 but plummeted to $1.04 just 22 days later, a 48% loss that clearly shows bears are in full control in the short and mid terms. KNC $12 hour chart. While almost everything is looking quite dull for KNC, a strong buy signal was created by the TD sequential indicator on the 12-hour chart. The MACD was on the verge of a bearish cross. However, the recent price action seems to be holding it. KNC holders distribution source sentiment. The buy signal is robust, thanks to an increase in KNC holders. According to the holders distribution chart provided by Sanbus, the number of holders with 1,000 KNC coins or more has increased over the past few days. Most notable, holders with at least 1 million KNC coins increased from 17 to 19. KNC IMAP chart source into the block. The next primary resistance cluster is found at $1.28, according to the IMAP chart. It seems that beyond this point, there arena T that many resistance levels. We can also see a resistance level in the form of a double top at $1.34, and then the 50 MA and 100 MAS will most likely act as resistance levels. NBSP KNC $12 hour chart bearish perspective. On the flip side, it also seems that KNC has been forming a head and shoulders pattern. A clear breakout of the $1 neckline would be devastating for KNC, and it could push the digital asset as low as 50 cents. Looking at the previous IMAP chart, the price of KNC is, in fact, at high risk of falling below $1 as there is not a lot of support, at least in comparison with the massive resistance above. Thus, investors must pay close attention to the $1 support and the $1.20 resistance level. Closing below or above this trading range will likely determine where Kyber Network's price is headed next. NBSP. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. USD/JPY weekly forecast lower, perhaps for longer analysis. http ntvforex.com News ID E7EA8B9182027 05:43 p.m. Yen gains 1.47% on the week, nears pandemic support line. Yoshihide Suga becomes Prime Minister replacing Shinzo Abe. PM promises to continue Abenomics, structural reform and deregulation prospects cheer yen. Dovish Fed extends zero rates to 2023, weakens dollar, BOJ stands pat. FX Street Sentiment Poll points to USD/JPY weakness NBSP through the third quarter. The yen regained its ascendancy against the dollar, rising 1.7% on the week after stalling for most of the month, as Japan installed a new prime minister and the Federal Reserve stretched its zero-rate prediction to the end of 2023. Opening at 106.16 on Monday, the USD/JPY closed lower each session and by Friday was resting just above the 104.20 support line that marks the low since the March crisis plunge and recovery. Chief Cabinet Secretary Yoshihide Suga was elected the 99th Prime Minister of Japan by the Diet following the nearly 8-year rule of Shinzo Abe, Japan's longest-serving leader, who stepped down for health reasons. NBSP Mr. Suga pledged to continue Abe's efforts to improve the economy, the so-called three arrows of loose monetary policy and a weaker yen, fiscal spending, and structural and regulatory reform. Reviving the economy remains the top priority of the administration, Suga NBSP said in a news conference after becoming Prime Minister. The most notable economic success of Abe's tenure was the devaluation of the yen, something he saw as a first step to reviving the economy. Over 2 years, from February 2012 to January 2014, the yen lost almost 40% of its dollar value, falling from 76 to 105.40. NBSP. Japan's economy improved modestly under Abe's administration after years of stagnation, though there are many doubts that strong growth is possible with the nation's massive public debt and a rapidly aging and shrinking population. Yen weekly strength. Mr. Suga's arrival, which had been ordained for several weeks, may give the deregulatory and economic revival effort renewed vigor. Combined with the Fed's dovish extension of low rates until the end of 2023 in the September projection materials, NBSP and the Bank of Japan's inaction, it reinforced the downtrend in the USD/JPY that extends back to late March and the COVID-19 market panic. NBSP. A longer downtrend originated in January 2017 at 117.50 and its April 2018 low of 104.64 was only pierced twice before this week, in the March panic and then in a brief drop to 104.19 on July 31, which forms current support. Japan Statistics Summary September 14 – September 18 – Japanese statistics were modestly better than expected, which may have given the yen an additional fill-up. Industrial production in July contracted 15.5% annually, less than the 16.1% forecast and June's 18.2% decline. It was, however, the 10th negative month in a row. NBSP on the month production rose 8.7%, stronger than the 8% estimate, after the 1.9% rise in June. Production has increased 10.6% in the last 2 months, about half of the 3-month decline of 22.4% to May. Yearly imports were 20.8% weaker in August, slightly over the 18% prediction, and though better than July's 22.3% drop, it extended the contraction to 16 straight months. Exports skidded 14.8% in August, under the 16.1% projection, and a substantial improvement from the declines of 19.2% and 26.2% in June and July, but the retreat lengthened to 21 months. NBSP. The contraction of Japan's once world-leading export sector has worsened considerably in the pandemic and its aftermath. In 2019, annual exports decreased an average of 5.5% per month. This year the decrease is 14.5% monthly and the 6-month average from March is 20.4%. Thursday's Bank of Japan meeting kept its 0.1% base rate and the slightly improved economic description, to a severe stata from a extremely severe stata, suggested that no additional support measures will be forthcoming. NBSP. The BOJ has eased rate policy twice this year by increasing asset purchases and beginning a loan program for small companies damaged by the crisis. Overall and core national CPI was weaker than expected in August. Annual prices rose 0.2%, one-third of the 0.6% forecast and down from July's 0.3% increase. In January the rate was 0.7%. Core prices dropped 0.1% on the year on a 0.4% prediction and July rate. In January the rate was 0.8%. U.S. Statistics Summary September 14–September 18 American economic data was generally poorer than expected, weighing on the USD/JPY. Industrial production in August rose 0.4%, less than half the 1% forecast, though July was revised to 3.5% from 3%. Retail sales increased 0.6% in August, missing the 1% expectation, and the July figure was revised to 0.9% from 1.2%. NBSP, the GDP component control group, fell 0.1%, much worse than the 0.5% forecast, and its July result was dropped to 0.9% from 1.4%. The Fed funds upper target was unchanged at 0.25% after the FOMC's Wednesday meeting. As noted above, the extension of current rates to the end of 2023 in the projection materials and Chairman Powell's wary assessment of the U.S. economy continued the Fed's overtly dovish policy stance. Initial jobless claims for the week of September 11 were 860,000, down from 893,000 prior. Continuing claims were 12.628 million, below the 13 million forecast and almost 1 million less than the previous week's 13.544 million. NBSP, the stubbornly high jobless figures are one of the chief cautionary notes for the U.S. recovery. Consumer sentiment in the Michigan survey was better than anticipated at 78.9 in September. 75 had been predicted, and it is now at its post-crisis high, though well below the February reading of 101. NBSP USD/JPY outlook: the combination of lackluster U.S. statistics, a visibly cautious Fed and a quiet BOJ, and a mild retreat of risk sentiment due to rising COVID-19 caseloads in Europe and only slowly withdrawing rates in the U.S. has reinforced the overall downtrend in the USD/JPY. NBSP, or to put it another way, there is nothing in the current markets to question or reverse the continuing and gathering move lower in the USD/JPY. The yen retains its safe haven status even if the current approach is gradual rather than panic-driven. Without a substantial improvement in U.S. statistics, the main economic variable, there is little reason for traders to change this view. At first blush, the USD/JPY reversed at 104.20 on Friday, but support there is not strong as it represents a brief one-day low without sustained price action. NBSP, the March panic lows can be ignored as a guide to future sentiment. NBSP prior support ranges from 100 to 105, but it stems from the second half of 2016 and is weakened by age. The NBSP area between 104.00 and 103.00 is largely barren of support. NBSP, it was only traded for 2 days at the height of the COVID panic, and price points from 4 years ago have scant relevance. NBSP, one caveat to the slide in USD/JPY could come from the new Suga administration in Tokyo. NBSP, the Abe administration made its economic reputation on its successful devaluation of the yen, which it characterized as an irrational impediment to Japan's export-driven economy. The initial rise in USD/JPY halted at about 105 and then ranged from there down to 101 from January 2014 to that September. NBSP, will the new government will want to cripple its nascent export and economic policies with an ever more expensive yen. NBSP, whether the BOJ has the financial firepower or the will to attempt an arrest of the strengthening yen is open to question. The same is true for NBSP. The NBSP impact of any supplemental budget NBSP forthcoming from Tokyo. NBSP Japan Statistics September 14 September 18 US Statistics September 14 September 18 Japan Statistics September 21 September 25 The Jibun Bank Manufacturing PMI for September will give the first look at the factory sector. NBSP, this secondary indicator has been under 50 and in contraction NBSP for 16 months, and little NBSP change is expected and it will have no impact on markets. The All-Industry Activity Indexes for July and retrograde whatever its result. NBSP. U.S. Statistics September 21 September 25 Existing home sales are 90% of the NBSP U.S. housing market, and they have rebounded sharply from the COVID closures. The NBSP July annualized rate of 5.86 million was the best since the declining days of the housing bubble in mid-2007. The NBSP surge of sales in June and July confirms that large swaths of the U.S. economy are healthy. Market's Purchasing Managers Indexes for September, manufacturing, services, and composite, are expected to be largely unchanged but a better than expected result. Could NBSP provide modest support for the dollar? NBSP Chairman Powell will testify in the House on Wednesday at the Select Subcommittee on the Coronavirus Crisis on the Fed's pandemic response. While no new information NBSP is expected, Mr. Powell's comments always have potential market impact. NBSP Mr. Powell and Treasury Secretary Mnuchin will testify before the NBSP Senate Banking Committee on the topic of coronavirus relief on Thursday with the same market stipulation. Initial jobless claims have receded in immediate effect, but their continuing high level makes an unexpected drop would possibly provide a boost to the dollar. NBSP.USD/JPY Technical Outlook. The relative strength index at 32.32 is just above oversold status, but given the fundamental picture and the lack of substantive support, it is not yet a reversal signal. NBSP The moving averages are all resistance adjuncts, with the 21-day at 105.04 backing the NBSP line at 105.00, the 100-day at 106.75 and the NBSP 200-day at 107.74 are out of the NBSP current technical outlook and await a reversal in the USD/JPY for relevance. NBSP given the range trading in August and September, resistance lines NBSP are more plentiful and of greater weight, with the 105.00 and 105.50 the NBSP most important in determining whether the USD/JPY remains offered. Support at 104.20 is of recent vintage, but the lines below have a dual pedigree from the short-lived panic in March and from the second half of 2016, and they are duly weaker. The NBSP technical view favors continued downward movement with numerous and well-appointed resistance above, 2 active channels and limited and weak support lines. Resistance 104.75, 105.00, 105.50, 106.00, 106.40, support 104.20, 104.00, 103.00, 102 US dollars and 75 cents JPY sentiment poll. The uniformly bearish predictions of last week were fulfilled, with even the one-quarter forecast at 104.98 proving inadequate to the USD/JPY movement. NBSP this week's sentiment poll sees another attempt at the downside with at 104.08 forecast NBSP, but the longer outlooks predicts stasis. With forecasts at 105.06 in both the 1-month and the 1-quarter view, it is clear our expert consensus does not anticipate a trend reversal. NBSP this coincides with NBSP the fundamental picture where the U.S. economy has yet to generate a convincing rationale for dollar strength. NBSP USD/JPY forecast poll NBSP. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Stocks fail to snap 2-week slide, tech war sinks risk appetite, Saudi threat unable to keep oil firm, gold higher on growing risks to outlook, Bitcoin sinks analysis http://ntvforex.com news ID 3cc6669182026 44 3 p.m. Today was mostly a relatively quiet quadruple witching that was saw bears prevent U.S. stocks from snapping its 2-week losing streak. NBSP this morning GA's leading index and consumer confidence data legitimizes the economic recovery up until now but does little to offer optimism over the mounting risks. NBSP The University of Michigan Confidence Report had better than expected readings on sentiment and current conditions, but did note that the data indicated that the election has begun to have an impact on expectations about future economic prospects. NBSP The leading index declined slightly, indicating the summer economic rebound has lost momentum. NBSP Mega-cap tech stocks are dragging everyone down right now. NBSP. The outlook is foggy for big tech as the latest TikTok developments continues to add further strain to US-China trade relations and as Wall Street needs to start pricing in a blue wave in November that would trigger higher taxes and tougher regulations. NBSP. The U.S. Commerce Department decision to ban Chinese-owned TikTok and WeChat from U.S. app stores on Sunday is bad news for tech stocks. NBSP. TikTok has until November 12, after the election, to address Trump's national security concerns. NBSP. The US-China trade war is evolving into a tech war and that will make it very difficult to like risky assets going into November. NBSP. The afternoon stock market sell-off stemmed from concerns second wave of coronavirus in Europe is getting out of control and as investors grow skeptical over the outlook for big tech. NBSP. Europe seems poised for renewed lockdowns and technology stocks have too many uncertainties regarding the brewing US-China tech war and potentially tougher regulations and higher taxes that could come with a Biden presidency. NBSP. Oil crude prices shrugged off earlier oversupply concerns from Libya as energy traders chose to remember Saudi Arabian Energy Minister's very harsh words to OPEC cheaters and oil short sellers. NBSP. Saudis are showing they will defend oil prices, and no one wants to go against them. NBSP. Energy traders will wait to see if Libyan NBSP military commander Khalifa Haftar confirmation to lift block on oil exports will be accepted by the National Oil Co. NBSP. It seems unlikely that Libya will quickly be back to producing 1.1 million bpd. NBSP. A wild card for oil has been a very active hurricane season which has made forecasters run out of names for the second time in history. NBSP. With over 2 months left in hurricane season, crude production may see further disruptions in the Gulf. NBSP. The weekly Baker Hughes rig count report showed the U.S. oil rig count fell by 1 to 179. NBSP. WTI crude tumbled after the demand outlook for crude was dealt a major blow following France's reported daily virus update that showed new cases rose above 13,000, the most since lockdown. NBSP. The second wave is hitting Europe hard and it seems inevitable lockdowns are coming back. NBSP. The Saudis' verbal threats only hold water if the demand outlook remains constructive. NBSP. Gold prices popped higher after reports that Congress is close to a deal on government funding, prompting hopes that a fiscal stimulus might not be far away. NBSP. House Speaker Pelosi sparked some optimism that the pressure is growing on both sides to get another virus relief bill done. NBSP. Democrats are currently seeking a $2.2 trillion package, while the White House has noted support for $1.5 trillion deal. NBSP. Gold is starting to look bullish again as the US-China tech war is seeing investors rotate out of the mega-cap tech stocks into cyclicals and safe havens. NBSP. The second wave of the virus is hitting Europe and the current wait-and-see approach with all the European central banks will likely be short-lived. NBSP. Lockdowns are coming back to Europe and many US states are recording more infections on a weekly basis and that will require both more fiscal and monetary support. NBSP. Gold remains trapped in its tight trading range after bulls were disappointed that Fed was not dovish enough. NBSP. If the tech war risks continue to deteriorate and surging cases globally trigger renewed lockdowns, gold could quickly break back above the $2,000 level next week. NBSP. Gold pared some of its gains as investors locked in profits following the stock market afternoon sell-off. NBSP. Bitcoin is participating in today's broader stock market sell-off. NBSP. Risk aversion has reasserted itself and no one wants to hold any major positions over this weekend. NBSP. Bitcoin news has been quiet for the past couple weeks, but a deteriorating global economic outlook could be positive for cryptocurrencies as Wall Street raises expectations for policy and lawmakers. NBSP. To deliver further fiscal and monetary stimulus. NBSP. As coronavirus cases continue to rise in the US and Europe, fears of renewed lockdowns will bring back a key rationale for owning cryptos. NBSP. The simplistic belief that fiat currencies will grow worthless as central banks continue to print money and balloon their balance sheets will be accompanied with growing risks. Some central banks are closer to bringing interest rates to negative territory. NBSP. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, Text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Gold weekly forecast: if XAU/USD breaks $1,974, then the trend could be back on analysis. http://ntvforex.com. News ID DB146669182025 12:32 p.m. Gold is trading over 0.5% higher on Friday and 0.75% higher on the week. This is a massive congestion area, but there are some key levels around. Gold 4-hour chart: the main levels to watch leading into next week. Gold has been consolidating heavily over the last month, and this week's Fed meeting did not inspire a breakout in either direction. Looking closer at the 4-hour chart below, the next main level of resistance is at the green resistance line at $1,973.54 per troy ounce. Beyond that, there is the $2,000 psychological level and purple line at $2,015.65 per ounce. A break of these key levels could lead to a test of the all-time highs. NBSP on the downside, there is lots of traffic that could support the price. The orange trend line has been used on 3 occasions to great effect. Beyond that, the main consolidation low stands at $1,915.50 per ounce. The interesting thing about the price action is the fact that there is both lower highs and higher lows. There is no point analyzing the indicators, or they are both in the mid-zone. Overall, a break to the upside looks more likely at the moment, and the green resistance is the one to watch for next week. Fundamental backdrop: the U.S. Federal Reserve are still stalling with the U.S. election coming up. It is not a major surprise that the Fed did not make any major policy changes, but we did get some info from the U.S. Central Bank. The dot plot indicates that the FOMC members do not think rates will rise until 2023. This is longer than some analysts had been expecting, and the long end of the rates curve reacted as much. The market seemed like they were waiting for some information that never came. The Fed are still asking for more fiscal support from the government, and there were some outside calls that the Fed may act because of the lack of progress. NBSP next week: PMIs are back in focus. There are lots of central bank speakers and data points to look forward to next week. The main event will be the PMIs, as this will give investors an idea of the state of the global economy. As these numbers are from September, there could be some continued improvement, and last month's numbers were in expansionary territory. Fed Chair Powell is set to speak twice, and at any point we could get more of an indication of the central bank's Fed thoughts. Although it may not impact gold massively, the market will get the latest thoughts from the BOE, who have been talking about implementing negative rates. NBSP Gold Forecast Poll: looking at the forecast, in the short term pollsters believe that the price will drop, but then the quarterly view is that the price will break $2,018 per ounce again. So bearish in the short and medium term, and back in line with the trend over the long term. Links to other gold-related articles: Gold Politics to be a driver for the precious metal ATDS. NBSP Gold Price Analysis: XAU/USD near strong support, eyeing $1,969 on the upside. A confluence detector. NBSP. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Weekly Economic and Financial Commentary. First impressions are not always right. Analysis: http://ntvforex.com. News ID 32BFD59182024 43:43 p.m. First impressions are not always right. On the face of things, it was a disappointing week for economic data. Almost every report this week was on the wrong side of expectations. Relative to consensus estimates, gains fell short, losses were larger, and unemployment figures were worse. The details were generally more favorable. The retail sectors hurt most by the pandemic saw gains in August. Factory output is growing, and soaring homebuilder confidence suggests soft construction data this week may be transitory. For details on the Fed meeting this week, see Interest Rate Watch on page 6. Global economy recovering from deep decline. The final verdict on the first half of 2020 came this week in the form of Q2 GDP for the G20 countries, which fell a record 6.9% quarter-over-quarter. Over the first of this year, G20 GDP fell 10.1%, more than 3 times the decline seen during the global financial crisis. China was the only key economy to grow in Q2, and those gains have extended into the third quarter. August industrial output firmed further, while retail sales showed their first annual increase since late last year. August employment also rose in Australia, while next week's September PMI surveys from the Eurozone and United Kingdom should garner attention. Download the full special commentary. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Midday market update. Nasdaq turns lower. Westport Fuel Systems shares surge. Analysis. http ntvforex.com. News ID 356,479 18/20/24 38:06 p.m. Midway through trading Friday, the Dow traded down 0.11% to 27,872.20, while the Nasdaq fell 0.58% to 10,847.47. The S&P also fell, dropping 0.39% to 3,343.85. The U.S. has the highest number of coronavirus cases and deaths in the world, reporting a total of 6,676,410 cases with around 197,650 deaths. India confirmed a total of at least 5,214,670 confirmed cases and 84,370 deaths, while Brazil reported over 4,455,380 COVID-19 cases with 134,930 deaths. In total, there were at least 30,205,220 cases of COVID-19 worldwide with over 946,670 deaths, according to data compiled by Johns Hopkins University. Leading and lagging sectors. Financial shares climbed 0.6% on Friday. Meanwhile, top gainers in the sector included NBSP Live Oak Bank shares, Inc. NBSP LOB 7.77%, up 9%, and NBSP Ocwen Financial Corporation NBSP OCN 8.26%, up 8%. In trading on Friday, real estate shares tumbled 1.2%. Top headline: U.S. consumer sentiment increase in September, with the University of Michigan's Consumer Sentiment Index climbing to 78.9 versus 74.1 in August. Economists were expecting a reading of 75.9 for September. Equities trading up. Cassava Sciences, Inc. NBSP SAVA 41.75%. NBSP shares shot up 35% to $9.54 following news of 2 insiders buying stock Thursday, even for a total of about 225,000 shares. Shares of NBSP Bloom Energy Corporation NBSP B 20.82%. NBSP got a boost, shooting 19% to $17.25 after Morgan Stanley maintained an overweight rating and raised its price target from $21 to $23. Westport Fuel Systems Incorporated NBSP WPRT 34.02%. NBSP shares were also up, gaining 34% to $2.175 after the company announced its YK Westport joint venture received certification from the Ministry of Ecology and Environment of China for its 12-liter engine equipped with the HPDI 2.0 fuel system. Equities trading down. BioVi Incorporated NBSP BIVI 20%. NBSP shares tumbled 19% to $10.15 after the company reported the pricing of an underwritten public offering of 1,565,200 shares at $10 per share. Shares of NBSP Adamas Pharmaceuticals Corporation NBSP ADMP 10.11%. NBSP were down 11% to $0.7046 after the company announced pricing of offering of common stock at 62 cents per share. Isora Inc. NBSP ISR 18.81%. NBSP was down, falling 19% to $0.6316. Isora reported a loss for the fourth quarter, while sales missed expectations. Commodities. In commodity news, oil traded up 0.7% to $41.27, while gold traded up 0.6% to $1,962. Silver traded up 0.2% Friday to $27.150, while copper rose 0.1% to $3.0725. Eurozone. European shares were lower today. The Eurozone STOXX 600 fell 0.5%, the Spanish IBEX index fell 2.1%, while Italy ASFTSE MIB index dropped 1%. Meanwhile, the German DAX 30 declined 0.3%, French CAC 40 dropped 1.1% and London ASFTSE 100 fell 0.4%. Retail sales in the UK climbed for the fourth consecutive month, rising 0.8% in August. German producer prices fell for the seventh straight month, declining 1.2% year-over-year in August. Economics. The current account deficit increased by 52.9% to $170.5 billion during the second quarter. The University of Michigan's Consumer Sentiment Index climbed to 78.9 in September versus 74.1 in August. The index of leading economic indicators increased 1.2% for August, versus analysts' estimates for a 1.3% rise. The Baker Hughes North American rig count report for the recent week will be released at 1:00 p.m. ET. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. EUR/USD Weekly Forecast. Central Bankers Get Off the Ring Analysis. http ntvforex.com. News IDC 78F6E9 2023 36:27 p.m. The Federal Reserve disappointed investors by refraining from expanding QE. Tepid growth data suggest a long way ahead towards pre-pandemic levels. EUR/USD is ending a second consecutive week unchanged, but dollar bulls nowhere to be found. Another week is coming to an end, and the FX market seems unable to find its way. The EUR/USD pair is poised to finish it little changed around 1.1850, its comfort zone pretty much since September started. Several central banks had monetary policy meetings these days, the US Federal Reserve included, but were far from being shining stars. In fact, the impact of the pandemic on economies, and the uncertainty on what is to come in that front, have policymakers as clueless as speculators. Central bankers saving bullets. The U.S. Federal Reserve revised its near-term economic outlook and now sees GDP down 3.7% this year, much better than the 6.5% drop forecasted NBSP in June. The unemployment rate is now seen at 7.6% from 9.3% previously. Yet, at the same time, policymakers pledged to keep rates near zero at least until 2023. The central bank added a year to its economic projections, with Chief Powell noting that this powerful forward guidance will provide support for the economy. Even further, the central bank indicated that the current levels of QE are appropriate. Economists were expecting the Fed to announce increased bond buying, but instead, the Fed said that more fiscal support is needed, rolling the ball into the Congress side of the court. And the Fed was not the only central bank that held back. Neither the BOJ nor the BOE introduced changes to their monetary policy, although the last one made some noise by mentioning negative rates. Still, and remembering the ECB's announcement a couple of weeks ago, NBSP and also RBA's low, it seems the subtle intention of central bankers these days is to keep currencies from appreciating, which may hurt the already battered economies. Within the pandemic context, central bankers have taken extraordinary measures. The crisis remains, and policymakers are reluctant to extend massive easing. It seems they are saving the last bullets NBSP should the ongoing tepid recovery suffers a setback. Tepid data fuels NBSP concerns. Macroeconomic figures released these days mostly indicate that, while progress is being made, economic activity remains well below pre-pandemic levels. To mention some of the most relevant numbers, European industrial production improved in July, but when compared to a year earlier, it was down 7.7%. The Union's inflation contracted 0.2% YoY in August. In the US, August retail sales posted a modest 0.6% advance, although the core reading printed at 0.1%, below the 0.5% expected. The focus next week will be on the Federal Reserve Chair Jerome Powell, who will testify before Congress. Given the recent central bank's meeting, it seems quite unlikely that his words could impact currencies. Also, market will publish the September preliminary estimates of its PMIs for the US and the EU. Market's expectations are of similar readings to August final ones. By the end of the week, the US Census Bureau will publish August durable goods orders, seen up in the month by 1.5%. EUR/USD technical outlook. The EUR/USD pair is ending a second consecutive week unchanged in the 1.184050 price zone. However, it posted yet another lower low of 1.1736 and a lower high at January 1900. In the weekly chart, the pair continues to develop far above all of its moving averages, with the 20 SMA maintaining its bullish slope above the larger ones. Technical indicators, in the meantime, stabilized well into positive ground, indicating that there is no interest on the greenback. In the daily chart, the pair retains its neutral stance. It keeps hovering around a directionless 20 DMA, while the larger ones keep heading north far below it. The momentum indicator turned marginally lower around its midline while the RSI indicator stands flat around 54. An immediate support level is 1.1790, followed by 1.1695, August monthly low. However, the greenback remains out of the market favor and a decline towards the latter seems unlikely. If it happens, strong buying interest will likely reappear around it. Resistances, on the other hand, come at January 1915 and January 2011, this year high. EUR/USD sentiment poll. According to the NBSP NTV Forex forecast poll, NBSP the pair has reached an interim top. NBSP bears are a majority in the weekly and monthly views, with bulls taking the lead by little in the 3-month perspective. Anyway, and on average, the pair is seen holding around the current level. The overview chart, however, indicates that higher targets are now being considered, reflecting decreasing interest on the greenback. The weekly moving average is heading marginally lower, but the monthly and quarterly ones offer neutral to bullish slopes. NBSP interestingly, and despite the ECB put a virtual cap on January 20, most targets in the longer-term perspective accumulate around it, with higher possible objectives expected as time goes by. Related forecasts. AUD/USD weekly forecast upbeat data overshadowed by scared central bankers. GBP/USD weekly forecast Boris a Brexit climb down insufficient to keep pound afloat. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Central banking cartel promises ZIRP until at least 2023 analysis. http ntvforex.com news ID B74EDC 9/18/2023 25:09 p.m. Gold and silver investors. NBSP who were hoping Wednesday's FOMC meeting would be a catalyst for a major breakout move were largely disappointed. NBSP the metals complex did not see an immediate boost from the Federal Reserve's dovish policy meeting. Still, the central bank's commitment to an accommodative monetary policy is set to play out not just over the course of a week, but of years to come. NBSP on Wednesday, the Federal Reserve announced it would continue to hold its benchmark interest rate near zero. That came as no surprise. NBSP, however, the extent of the Fed's commitment to avoid any rate hikes in the future raised the eyebrows of many veteran observers of monetary policy. Not only did members of the central banking cartel vow to keep rates down for the remainder of the year, they also signaled there would be no rate hikes in 2021. But they went even further than that. All voting members with the exception of one pledged to keep interest rates near zero through 2022. And a majority voted to maintain current interest rate policy at least until the end of 2023. Fed's 0% interest rates as far as the eyes can see. Yahoo Finance report the latest FOMC meeting has reassured markets that there is no chance for a rate hike for at least 2 years. The Euro-dollar futures market, which trades out much farther than the federal funds futures market, is forecasting a 25 basis point rate hike Indiana mid-2024. That shows that the market is currently expecting the negative effects of the pandemic to linger and hurt the economy for many years to come. Yahoo Finance analyst NBSP Now, the Federal Reserve codifying that in the statement today, committing to keeping interest rates at that level until labor market conditions have reached levels consistent with the committee's assessment of maximum employment and inflation has risen to 2% and is on track to moderately exceed 2% for some time. No economist or market guru on the planet has a crystal ball that can tell them what the GDP or the unemployment rate or the inflation rate will be 3 or 4 years from now. But apparently Fed officials think they are smart enough to see that far into the future and are able to know today what the optimal interest rate will be then, that is, effectively zero. The truth is that all they know how to do is react to signals given to them by markets, politicians, and banks. NBSP If the repo market freezes up or stocks on Wall Street tank, they roll out more stimulus. NBSP If the government needs to expand its borrowing capacity by trillions of dollars to finance deficits, then they commit to buying more treasuries. NBSP If the leveraged financial system requires more inflation to eat away at the real value of otherwise unpayable debt obligations, then they commit to depreciating the currency at a more rapid pace. NBSP The Fed is continuing its $120 billion per month quantitative easing program, which has ballooned its balance sheet to more than $7 trillion. And it won't turn off the monetary spigots until government-measured inflation rates exceed 2% over some unspecified period. NBSP An inflation rate above 2% with interest rates remaining well below that level would be a hugely bullish driver for precious metals markets. According to the World Gold Council, in years when the inflation rate has exceeded 3%, the NBSP price of gold NBSP increased 15% on average. Gold and silver do not merely keep pace with rising inflation. They tend to hugely outperform it. Of course, if there comes a time when the Fed is forced to aggressively hike rates above inflation to bring it back down, then the metals can suffer outsized declines. An environment of positive real interest rates and declining inflation rates do not appear to be something metals investors will need to worry about anytime soon, and probably not for the next few years. There will be inevitable volatility along the way, but it's hard to see anything but a continuation of the major bullish trend going forward. The coronavirus lockdowns were certainly a catalyst for a surge in physical buying this year. Even though bullion market conditions have since settled down, sales of coins, rounds, and bars continue to far outpace those of a year ago. NBSP We are eyeing the upcoming election as the next potential catalyst. With polls tightening between President Donald Trump and former Vice President Joe Biden, fears are growing over a contested election that could drag on for weeks. NBSP An expected torrent of mailed-in ballots could overwhelm state election systems. The backlog could spark highly charged fights in the courts and on the streets over which ballots get counted and which ones get thrown out as late, incomplete, or fraudulent. NBSP If there is anything sure to rattle markets, it's uncertainty. During uncertain times when the only thing that can be counted on from the authorities is to keep printing currency, precious metals provide a rock-solid and necessary counterbalance to conventional risk assets. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. AUD/USD weekly forecast. Upbeat data overshadowed by scared central bankers analysis. http://ntvforex.com. News ID 09234891 2023 18:49 p.m. Australia managed to create 111k new jobs in August, despite the Victoria lockdown. The US Federal Reserve joined the wait-and-see club. AUD/USD holding on to its long-term bullish trend around 0.7300. The AUD/USD pair is trading around the 0.7300 level, unchanged for a second consecutive week, despite there were quite a few headlines that could have spurred action. Somehow, the lack of action across the FX board reflects a similar behavior among central bankers. This past week was the turn of the US Federal Reserve, which, as widely expected, kept rates at record lows near zero, and formalize the new framework focused on targeting average inflation. And while policymakers left the doors open for further easing, they showed that they are in no hurry to increase facilities, instead passed the ball to fiscal authorities. The Fed's stance was quite similar to that of the RBA, which met earlier this month. A modestly optimistic upgrade of the economic outlook, covered with a good dose of uncertainty and linked to the pandemic developments. Policymakers from around their world pledged to keep supporting the economy but refrained from making new announcements for the near term. Data remains below pre-pandemic levels. Political tension in the US, as elections loom, combined with an uneventful Federal Reserve. Equities remained under pressure, although at least US indexes did not extend their slumps. Wall Street capped Aussie gains, alongside gold prices, which continue to trade at the lower end of their latest range. NBSP gold buyers hit the brake as central banks halted the provision of easy money. Good news in Australia fell short of boosting the Aussie. According to the official release, the country added NBSP 111k new jobs in August, while the unemployment rate fell to 6.8%, beating expectations, despite the lockdown in Victoria. In the region, however, 42.4k lost their jobs. NBSP also, coronavirus cases in the country continued to ease, which lead to a lift to the travel cap for citizens abroad. NBSPA with the success we have had as a country in recent months, we can start opening up again and we can start helping Australians getting home again, a Prime Minister Scott Morrison said this Friday. NBSP the country has reported 48 new cases this Friday, 45 of which are in the mentioned Victoria region. As of today, coronavirus cases in the country total 26,861, with the death toll at 837. Chinese data released this past week was also upbeat, as industrial production increased 5.6% in August, while retail sales in the same month rose 0.5%, beating expectations. Yet as it happens globally, macroeconomic figures show that economic activity remains well below pre-pandemic levels. The upcoming week will be quite light in terms of macroeconomic data, as Australia will only publish the preliminary estimates of the September Commonwealth Bank PMIs. Manufacturing activity is seen falling again into contraction territory, as the index is foreseen at 48.3 from 53.6, while services output is expected to have shrunk further, down from 49 to 48.3. The US, on the other hand, will see Fed's Chief Powell testifying before the Congress, the September preliminary market PMI and August durable goods orders. NBSP AUD/USD technical outlook. The AUD/USD pair retains its long-term bullish potential intact, according to the weekly chart. For a third consecutive week, the pair is above its 200 SMA, while the 20 SMA has crossed above the 100 SMA, both well below the larger one. The RSI indicator keeps consolidating near overbought readings, while the momentum indicator has picked up within positive levels, after correcting extreme overbought conditions. Daily basis, the pair has continued developing above a mildly bullish 20 DMA, while the larger ones keep advancing below it. Technical indicators, however, lack directional strength, the momentum within neutral levels and the RSI around 57. The bearish potential seems quite limited due to price behavior and despite easing indicators. A relevant support level is 0.7190, followed by the 0.7100 figure. Given the persistent $S weakness, it seems quite unlikely that the pair could fall below this last. Resistances for the upcoming days stand at 0.7350 and 0.7413, the high set this September. AUD-USD sentiment poll. The NTV Forex forecast NBSP poll. NBSP suggests that bulls hold the grip, as most polled experts see the pair advancing next week with an average target of 0.7322. Buying interest eases in the monthly and quarterly perspectives, as bears are a majority in both cases, although in both cases, the pair is seen around 0.7200 on average. The overview chart shows that, while moving averages have lost momentum, the bearish case remains weak as slopes are neutral to bullish. It also shows that the number of experts betting for sub 0.7000 levels have continued to decrease, while there is quite an increase of higher possible targets, in line with an advance towards the 0.75-0.76 price zone. NBSP-related forecasts. GBP/USD weekly forecast. Boris Brexit climb down insufficient to keep pound afloat. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. China economic recovery is broadening analysis. http ntvforex.com News ID 509BBB 9/18/2023 17:27 p.m. China's economic dynamics continued to improve in August 2020. As seen in our monthly pulse, the expansion of the blue area compared to the dotted area shows a more widespread recovery in activity. Whereas the improvement since March was initially driven by the rebound in industrial production and investment in public infrastructure and real estate, it has now reached other parts of the economy. Activity indicators have picked up in industry and services. Regarding demand components, investment has continued to strengthen and exports saw a solid bounce back in July and August, up 8.4% YY in value terms. Even the value of retail sales reported slightly positive growth in August, 0.5% year-on-year for the first time in 2020. However, retail sales were still down in volume terms 1.1%, and well below their 2019 level over the first 8 months of the year, 8.6% YY. Online retail sales have continued to make ground. The return to normal levels of activity in a large number of industrial sectors therefore seems to be complete. However, the shock due to the COVID-19 epidemic has severely damaged the financial situation of many corporates, especially micro-enterprises and SMEs and NBSP households, and this could continue to weigh on private investment and consumption. Consumers remain very cautious, notably due to health risks and labor market trends. The unemployment rate calculated by the NBS on the basis of survey data rose abruptly from 5.3% in December 2019 to 6.2% in February 2020. It has fallen again since March to 5.6% in August but remains unusually high. Moreover, this rate is likely to underestimate this year's deterioration in the labor market. First, it measures only urban unemployment, and second, it does not take into account a large share of the migrant workers who lost their jobs during the lockdown period. Download the full Echo Week. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. U.S. monetary policy goes inclusive analysis http://ntvforex.com News ID 1/8F99/18/2023 16:25 p.m. Over the past 10 years, fostering inclusive growth has moved higher up the agenda of governments, international institutions and, increasingly, companies. Under Chairman Powell, it has become a key topic for the Federal Reserve through the focus on the heterogeneity of the labor market situation of different socio-economic groups. It has led to the view that preemptive tightening based on a declining unemployment rate is unwarranted. On the contrary, it may very well stop people from finding a job. It will be interesting to see whether other central banks and in particular the ECB in the context of its strategy review, will follow in the Fed's footsteps. Inclusive growth can be defined as a growth that is both sustainable and broad-based in terms of employment opportunity. SA 1. Over the past 10 years, fostering inclusive growth has moved higher up the agenda of governments, international institutions and, increasingly, companies. Under Chairman Powell, it has become a key point of attention of the Federal Reserve. Powell's introduction to the press conference following the latest FOMC meeting perfectly illustrates the focus on the heterogeneity of individual situations. The economic downturn has not fallen equally on all Americans, and those least able to shoulder the burden have been hardest hit. In particular, the high level of joblessness has been especially severe for lower-wage workers in the services sector, for women, and for African Americans and Hispanics. This focus was also an integral part of the Fed's strategy review. To this end, between February and October 2019, a large number of Fed Listensaw meetings have been organized throughout the United States, allowing a cross-section of American society to express views on the economy, inflation, monetary policy, etc. 3. The insights are fascinating to say the least and reveal the gap between theoretical concepts like the Phillips curve or the natural rate of unemployment and the reality on the ground. Participants wondered why the labor market was characterized as a HOTA while in their own communities unemployment remained structurally high. Business representatives explained they had developed training programs to cope with recruitment difficulties in a tight labor market. Interestingly, raising wages was not considered as a means of attracting and retaining workers. Rather, the emphasis was put on training programs, health care, or other benefits. Another striking observation was the fact that inflation was less discussed than the labor market. Against this background, the change in the longer-term strategy of the FOMC is all the more understandable. A robust job NBSP market can be sustained without causing an outbreak of inflation or, to put it technically, when the Phillips curve is flat, a decline in the unemployment rate is insufficient a reason to tighten monetary policy because this decline does not convey information about the future development of inflation. The central bank can afford to wait before tightening policy. In the old days, when the Phillips curve was upward sloping, rate hikes were preemptive. Alan Greenspan's preferred metaphor was that of bringing an oil tanker to port, a maneuver which needs to start well before seeing the harbor. Now, monetary policy can be reactive with central bankers waiting to see a sufficient pickup in inflation before getting into action. Download the full Echo Week. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. China app ban royals markets analysis http://ntvforex.com News ID B29DC5918-2023 11:53 p.m. Friday. AS Earlycom has been shattered by the U.S. decision to ban some Chinese apps, with tech stocks taking the brunt of the losses. NBSP Trump moves to bank TikTok and others. Stock market weakness points towards a possible change of White House resident in November. Gold edges up as U.S.-China tensions rise. The atmosphere across stock markets is turning sour as the weekend looms, as investors fret about possible retaliatory measures from China after the U.S. announced a ban on key apps from Sunday. Such a move opens an entirely new dimension to the U.S.-China standoff, and puts major tech firms squarely in Beijing's sights, as the two powers seek out their opponents' weak spots. US markets have struggled to hold their ground all week, and as the week comes to a close it looks like more pre-election losses are in store. The Nasdaq continues to lead the losses for US markets, which is a very negative sign for equities in the near term. Such an absence of risk appetite flags the potential for a much bigger drawdown as the election nears, which would conform to the normal pattern for election years, and also suggest that the Republicans are on course to lose the White House. At least gold has benefited from the outbreak of risk aversion, recovering $1,950 and marking a continued rebound after the sharp losses of Wednesday and Thursday. The safe haven has continued to see inflows in recent weeks, giving it a foundation to push back towards $2,000 and the highs seen at the beginning of September. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Consumer sentiment is improving. Analysis http://ntvforex.com News ID 7DDE3C918-2023 10:55 p.m. Consumer sentiment picked up in early September as perceptions about the economy improved. Confidence still remains well below its pre-virus level, but it moved in the right direction in September. Sentiment rebounding. The University of Michigan's Consumer Sentiment Index rose to 78.9 in September, marking the highest reading since March. Both current conditions and expectations improved. Notably, just 16% of consumers, the smallest proportion since 2015, expected the economy to worsen over the next year. Sentiment remains way below its pre-virus level, but notably it hasn't tested the lows visited in the aftermath of the 2008 crisis. Keeping an eye on household finances. Perception of finances were influenced by declining incomes, with more respondents reporting an income decline rather than gain for the first time since 2014. Lower income households reported a decline more frequently, likely reflecting the expiration of supplemental jobless benefits. With much hand-wringing over if dwindling stimulus would weigh on spending, perceptions of finances clearly took a hit, but overall sentiment remains buoyant. Download the full economic indicators. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. GBP/USD weekly forecast. Boris Brexit climb down insufficient to keep pound afloat. Analysis http://ntvforex.com News ID 7E991C918-2023 09:41 p.m. GBP/USD advanced on hopes for a Brexit compromise but suffered from the Fed. A critical vote in Parliament, UK PMIS, and US figures are eyed. Late September's daily chart is painting a mixed picture. The FX poll is pointing to a bullish outlook in the short and medium terms before a fall later. Boris gave, Powell took it away. UK Prime Minister Boris Johnson agreed to compromise on the controversial Brexit bill and sent the pound higher before the Federal Reserve boosted the dollar. Politics are set to outweigh economic figures in rocking the pound in the last full week of September. NBSP this week in GBP/USD. Brexit hopes versus Fed fallout. Brexit. The controversial Internal Markets Bill passed its first hurdle in the House of Commons, initially sending down the pound. The legislation knowingly violates the Brexit withdrawal agreement that PM Johnson signed with the EU last year. Investors feared that negotiations would imminently collapse. An insufficient amount of Conservative Party rebels voted against the bill. However, the PM later reached a compromise with these rebels, agreeing to grant Parliament a greater oversight role over applying the law. The news NBSP pushed the pound higher, although Brussels has yet to respond. It seems that EU officials are waiting to see the text of the modified Bill A or perhaps holding their criticism before it turns into law. NBSP on the other hand, Chief EU negotiator Michel Barnier said there is a glimmer of hope on the politically sensitive fisheries issue, providing support to sterling. Moreover, European Commission President Ursula von der Leyen said she is convinced a deal is still possible. NBSP then came the central banks, both downing the cable. The Federal Reserve signaled it would leave rates unchanged through 2023 but refrained from offering any imminent support despite conveying a message of concern and uncertainty. According to the Fed's projections, the bank now expects a softer than previously estimated contraction in 2020, but also a shallower recovery in 2021. Jerome Powell, chairman of the Federal Reserve, seemed to throw the ball into lawmakers' court without acting. Stocks dropped and the safe haven dollar advanced. Indeed, the chances for additional fiscal stimulus have risen after the U.S. reported weak retail sales figures for August. Reports on Capitol Hill suggest a package worth $1.5 trillion is cooking. Contrary to the Fed, the Bank of England does intend to act potentially by setting negative interest rates. The minutes from the BOE's meeting revealed that the bank is testing the effectiveness and the implementation of such a move. Sterling dropped sharply on the news. The BOE also expressed worries about the economic outlook amid Brexit uncertainty and the rise in virus cases. Cases are on the rise in the UK, prompting new restrictions in the northeast. Fortunately, mortalities remain at low levels, at least when comparing to the US. Source FT UK data was mostly upbeat, with jobless claims rising by 73,700, less than estimated, while headline inflation rose by 0.2%, also above expectations. The unemployment rate edged up to 4.1% in July, as expected, yet that hinges on the ongoing implementation of the furlough scheme. NBSP UK events Brexit vote, PMISID. As recent volatility has shown, sterling is becoming more sensitive to what will NBSP happen. NBSP after the Brexit transition period expires at year-end. Parliament is set to approve the Internal Markets Bill during the week, and markets will focus on the EU's response. If talks collapse, the pound would tumble, while attempts to reach a compromise would boost it. BOE officials may have the chance to clarify their intentions in Westminster hearings or interviews. How determined are they to set negative rates? How close is the move? The pound may rock on any hint from Governor Andrew Bailey, who has scheduled speeches, or any other member of the Monetary Policy Committee. NBSP Rishi Sunak, the Chancellor of the Exchequer, has yet to announce what would replace, if at all, the furlough scheme which expires next month. The spectre of mass UK layoffs is worrying about the nation and markets. A gradual tapering of the scheme is likely, but without details, sterling could suffer. The longer and the more generous the gradual retreat from the program is, the better for the economy and the currency. Market's preliminary purchasing managers' indexes for September are projected to show an ongoing recovery, with statistics for the services and the manufacturing sectors printing well above 50 points, firmly in growth territory. Any slide toward this break-even level could show investor fear and result in a weaker pound. NBSP. Here is the list of UK events from the NBSP NTV Forex NBSP calendar. US events. Politics takes center stage. The Fed already announced its last pre-election decision, yet Chairman Powell may still move markets via public appearances, and so can his colleagues. Hints about expanding the bond buying program may boost markets and weigh on the dollar, while urging elected officials to agree on fresh relief would weigh on stocks and boost the safe haven greenback. NBSP. At the time of writing, Democrats and Republicans are still playing the blame game and don't seem to get any closer to an accord. However, a group of moderate self-proclaimed problem solvers may present a deal that the party's bigwigs may eventually accept. The larger and the faster a deal arrives, the better for equities and for GBP/USD. Ongoing accusations could weigh on cable. The bigger political battle is for the White House. While President Donald Trump has somewhat narrowed the gap in national polls, Biden looks stronger in several critical battleground states. According to 538, he has a 76% chance of replacing the incumbent. NBSP source 538. The Economist's model shows better chances for the Democrat, 86% at the time of writing. Both models have hardly changed in recent weeks and seem to show that the conventions had little or no effect. Source: The Economist. Markets fear a contested election in which Trump declares victory on election night, ahead of the slow count of mail-in ballots. Later, Biden could be declared the victor, but Trump would call it a fraud. A constitutional crisis would significantly hurt business and consumer confidence. NBSP growing fears and tensions ahead of the first debate on September 29 could weigh on markets and boost the dollar. On the data front, several housing figures are of interest during the week, yet the most significant publication awaits traders on Friday: durable goods orders for August. Has the lapse of government aid weighed on investment? That is an open question. Continuing claims for the week ending September 11 are also of interest, as that is when the non-farm payrolls surveys are conducted. NBSP overall, battles on fiscal stimulus and for the White House are set to dominate, with economic releases playing only second fiddle. NBSP here the upcoming top U.S. events this week. GBP/USD technical analysis. Pound dollar continues suffering from downside momentum on the daily chart and has failed to top the 50-day simple moving average. However, it bounced off the closely watched 200-day SMA. The relative strength index is balanced and the general picture is mixed. The 1.30 level remains a critical battle line, especially as it converges with the 50-day SMA and after serving as a double bottom. The next line to watch is 1.3060, which worked as support in mid-August, and it is followed by 1.3170 and 1.3250. Support awaits at 1.2980, a swing low seen twice in September, and then by 1.2805, June's high. Next, 1.2765 was September's low, and 1.27 is next. NBSP GBP/USD sentiment. NBSP with plenty of time until the Brexit deadline, a deal is unlikely to be struck soon, which has weighed on the pound. Rising U.S. political tensions could boost the dollar. Overall, there is room for the cable to fall. The NBSP NTV Forex forecast poll. NBSP shows that investors are seeing a moderate uptrend in the next week and cable topping 1.30 in the next month. However, they are somewhat bearish on the long-term move. While the short-term target has been upgraded, it seems that experts are waiting for further developments before changing other targets. Related reads how central bank inaction turns to action in currencies and what's next for markets. 2020 elections. How stocks, gold, dollar could move in 4 scenarios, Nightmare 1 included. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors.